Everyone is happy, prices are going up, and it seems like the situation is clear. Money is flowing into every single asset, people are buying altcoins left and right. But actually, that's not what's going on. The situation is much less clear than it initially seems. Because here's the thing, yes, the altcoins are going up, but in aggregate, they're not doing that much better than the rest. So people that have been in crypto for a while, they might know this metric here. This is the others dominance. So this looks at all of cryptocurrencies market cap, and it checks how much of that market cap is currently in the altcoins that are not in the top 10. And in the last few months, this just went sideways. So measured in US dollars, everything is fine. But within the crypto ecosystem, the altcoins were not necessarily worth the risk. But the situation is actually much worse than this. The reason why the altcoins are going up is not because people are buying Bitcoin, Ethereum, Solana, and also the altcoins, because people are just positive on crypto as a whole. The reason why the altcoins are actually going up is because Ethereum is getting all of that demand. There is a direct coupling in price, a mechanistic coupling between the Ethereum price and the altcoin prices. Ethereum's price appreciation has everything to do with the Ethereum treasury companies and the Ethereum ETF. Since April of this year, we see accumulation by the strategic Ethereum reserve companies. And because of that accumulation, we also see purchases through the ETFs. But here's what's important to understand. When the Ethereum price is going up, then most altcoins go up with it due to the direct coupling in the liquidity pools. So have a look at how crypto trading technically works. We've got pools of capital with two assets. So on the one side, for example, Pepe, and on the other side is wrapped Ethereum. When you buy an altcoin like Pepe, technically you're selling Ethereum and you're getting into Pepe. There's a swap happening between those two assets. If you're swapping your stablecoin, let's say USDC or USDT versus Pepe in this example, then two swaps in the background happen. One swap to wrap Ethereum and another swap to Pepe. You're also paying fees for that twice. Really, the price of Pepe is not determined by its value in US dollars, it's determined by its ratio in the liquidity pool. How many Pepe tokens are in the liquidity pool versus how many wrapped Ethereum are in the liquidity pool. This is so important to understand. In this liquidity pool, for example, we've got 2.87 trillion Pepe and 6,787 wrapped Ethereum. And the ratio between the two is what actually determines the Pepe price. In other words, if now wrapped Ethereum goes up by 10%, Ethereum and wrapped Ethereum is the same thing. If Ethereum appreciates by 10% because of that institutional demand, then automatically Pepe also appreciates by 10% in US dollars. Not a single trade has to happen. Nothing here has to change hands. The US dollar price automatically goes up because of this direct technical connection. And so then when we see a screen like this, how all the altcoins are going up and how they all go up and down at the same time, we finally have an explanation for this, right? It's mainly Ethereum that's driving this. Now there are different base blockchains for different altcoins, right? We've got Ethereum and Solana being the main ones, but that's really what's driving the prices. It's the main cryptocurrencies, Bitcoin, Ethereum, Solana, and the main out of those three that are most correlated to all of the altcoins is Ethereum. And so this picture here is actually quite deceptive, the others dominance. Because yes, within all of crypto, the smaller altcoins simply just went sideways in the last few months. But relative to Ethereum, the altcoins did much, much worse since the beginning of April, since the story with the treasury company started. Now, when we calculate the ratio between the market cap of the altcoins and the market cap of Ethereum, we finally get a real insight of how the trading actually happens. When there's really altcoin season, when there's actually people buying the altcoins with the Ethereum they currently have. We completely eliminate the in and outflows of Ethereum itself. And it's probably good to look at this at a bit longer time frame. And here we go. This chart starts in 2017. And initially we saw a lot of adoption of the altcoins. That came with a bit of volatility. But then in the last 3 to 4 years, we tended to trade in a quite stable range. Since April of this year, the altcoins are doing much worse than Ethereum. But the question really is, what is going to happen next? What happened in the last few months is not necessarily what's going to happen in the future. It looks like Ethereum relative to the altcoins is quite expensive. And so when we assume that this trading range here will prevail and that we will bounce at some point, there's only two possible scenarios. The first scenario is that the Ethereum price goes down. The second scenario is that we see a rotation from Ethereum, more risk on, into the altcoins. That we actually see altcoin season. Now, what's the more likely scenario? Is Ethereum going to get sold off, or are people going to go crazy about the altcoins? Are we going to see an altcoin rally? Now, I don't have a crystal ball, but here is how I personally approach this question. So here's scenario number one. The Ethereum dominance goes back down, which based on this chart doesn't necessarily have to be the case, right? Ethereum dominance historically went all the way up to 21%. But that's scenario number one. ETH is getting sold despite the treasury and ETF story. Scenario number two is that the altcoins suddenly outperform, that the others' dominance is going up. Again, something has to give if this trading range prevails. ETH is going down or the altcoins are going up. Now, altcoins are mainly bought by the retail investor, right? It's people that jump into crypto maybe for the very first time, that have seen the rally in Bitcoin, that have seen the rally in Ethereum, that think that maybe there's not that much more upside potential for those assets, and that then consequently buy into the altcoins because that's potentially where the next 5, 10 or 20x is. That's the thinking of most new retail investors. Let's have a look at the attention of retail or the masses or the number of search queries for crypto and for Ethereum. This did go up quite a bit in the last few weeks. Again, Ethereum has just hit an all-time high. But when we zoom into the last 12 months, it tends to slow down again. So this would speak against an altcoin rotation. If the average retail investor suddenly gets excited about crypto and considers buying the altcoins, shouldn't the attention continue to go up? Shouldn't we see levels comparable to May of 2021? I've got the impression that the market is currently anticipating what Wall Street is doing. So there's all those inflows through the Wall Street companies, through the ETFs and the treasuries, and retail or the smaller investor just tries to anticipate what's going to happen with those kind of investors in the future, and they're setting up themselves accordingly. And so we see this massive, very quick accumulation through the ETFs and through the treasury companies. But when the treasury companies themselves are unlikely going to buy Dogecoin and Floki Ino and the token by Pump.fun, etc., then is the retail investor on average really going to buy a sufficient amount of altcoins? Because we've got all of that token inflation, right? We've got new tokens hitting the market in the altcoin sector regularly. So every week we've got roughly $1 billion worth of new cryptocurrency entering just through token dilution into the altcoin market. That's roughly triple of what we are seeing in terms of selling pressure through the mining for Bitcoin. So we need at least 3 times the demand for the altcoins compared to the demand for Bitcoin just for the altcoins to outperform Bitcoin. Historically, altcoin season always happened when Bitcoin's dominance was close to 70%. So we had an altcoin season at the end of 2017, we had altcoin outperformance at the end of 2019, and then the real massive outperformance happened at the beginning of 2021. Now we are seeing little blips in Bitcoin dominance every now and then. So this was when Solana had its run with the meme coin trading. Now we have Ethereum getting purchased because of the treasury story. But the market seems to not yet be hot enough to justify a real altcoin season. When it comes to this chart, the altcoins relative to Ethereum, I think it's more likely that Ethereum will give rather than the altcoins starting to outperform. This scenario, I think, is more likely than this scenario. Bitcoin dominance is likely going to bounce because the retail investor isn't yet coming back. Retail is simply anticipating what Wall Street is going to do and tries to act a bit faster than that, tries to front run the big money. Now, wherever there are patterns in price movement, there's a potential opportunity. A lot of people say that it's just random, that there's only luck involved in trading and in active investing. But really, once we have repeatable patterns, it's not. So let's look at this fundamental pattern. This is Dogecoin as an example. Very often we see prices shooting up extremely quickly to then deflate over a very, very long time afterwards. So for whatever reason, the price moving up happens much faster than the price moving down. We see this in Dogecoin. We also see this in Floki Ino, right? Just have a look at how quick this rally happened and then how long it took to deflate again. And it doesn't just happen with meme coins, right? This is XRP. It went up quickly to then subsequently deflate for a very long time. Or here, right? The rally happened just in a matter of a few days. A secondary rally happened, but then again the deflation took a long time. So there is obviously some kind of pattern here, and this is across the entire crypto space. And there is a fundamental reason for that. I believe that reason is attention. People say that we live in an attention economy and that attention equals money. And for crypto, that's exactly the case as well. As there is more attention on an asset, the price tends to go up. Now, why does it go up much faster than it tends to go down? Because usually there's some kind of event that happens that brings all the attention on an asset. So people read the news and they wonder, should I buy TON now? Should I buy XRP now? Should I buy YZY? Whatever it is, right? There's always something going on, and attention means potential purchases. There's also influencers that talk potentially about small cryptocurrencies that then bring a lot of purchase orders with it, right? When thousands of people watch a certain video on a small altcoin, then of course this has some implication on the price. And so we've got this overall capital pool that tends to grow over time, right? Crypto is still a growing market, but within that capital pool, it tends to concentrate towards a few assets at different points in time. Once there is attention on an asset, the price goes up, but then if there's no new news, then the attention tends to fizzle down and tends to go to the other assets. So it's a bit of a game of whack-a-mole, right? There's asset A that gets pumped up, then it's asset B, etc. And so this is where most people lose, right? Most people try to find the needle in the haystack, the 1, 2, 3, 4, 5 altcoins that made the multiple X returns, while the vast majority tends to go down. How likely is it that when you're buying the next recommended altcoin, that's going to be the next KeyCat or the next Dog in Me or the next GP token? The likelihood is rather low. You're probably ending up rather with Coq-Ino or with Pepecoin or with the Apex token. If you're really honest with yourself, when you look at your altcoin trading and you compare that performance, not to the US dollar, but relative to just the buying and holding Bitcoin, Ethereum and Solana, how much did you actually outperform with the active trading? Very likely you underperformed. And again, this is because this is a rigged game. There are a few people that influence the market, that push up prices, and then over time those prices deflate again. I'm doing the exact opposite. I'm trying to find the tokens that got hyped, but where then that hype is dying down, where we're already in the deflation. And then I bet on relative valuations that those kind of assets continue to do worse than Bitcoin, Ethereum and Solana. So while the vast majority of retail investors, they just buy what the influencer has shilled, what the influencer is promoting, where the influencer potentially even got money to promote it, I do the exact opposite. I bet on falling prices at that time. So let's say Elon Musk tweets about Dogecoin again, Dogecoin pumps up, the retail investor gets in. That's when I put this on my watch list. And I'm looking at what point in time is it starting to deflate. And I bet on falling prices over here. Just have a look at what I shared on February 14th. I'm entering a Dogecoin relative to Bitcoin short position. Then 1 month later, I sold it. And that was because Dogecoin underperformed Bitcoin at that point by 32%. So that's what you want, right? You want underperformance when you bet on falling prices. There are a few details to this strategy, but it is a long-term winning approach. Just have a look at a few trades that our community has done. Now, I've actually opened a capital pool where the community members, the premium community members of this channel, were able to pay in. This capital pool, unfortunately, has already been closed because we have hit our maximum deposit limit. We are still trading with this until end of the year. I will continue to share the performance here, but it just shows how constantly we can can make money by doing the opposite of what most other people are doing. This is 1.5 months. The maximum drawdown from top to bottom was only 2.6%, and we are already at an annualized return of 78%. Before running this capital pool, I've done this approach myself on my own capital, and that's the return over the last 4 years. So this is just a chart from Excel. This is monthly data. Had I just dollar cost averaged into Bitcoin, I would have gotten the return here marked at this gray line. But because I also did shorts on very poorly performing altcoins, I got the return indicated here in black. And I know it can be a bit daunting at first, doing something completely different, going long one asset, going short another asset, doing an entirely different approach compared to just buying an altcoin, just following an influencer that promises you the next 10 or 100x. I know this is a different mindset, but again, we have to do the opposite of what most other people are doing. I created some tutorials to make this as easy as possible. If you want to keep it brief and you're busy, you just have to watch 2 videos. How to use perpetual futures on hyperliquid and how to do risk management with relative valuation bets on hyperliquid. It's only those 2 videos and they are in total just 1 hour in length roughly. After you have watched those 2 videos and you've joined the community, I will then send to you my favorite trade. Now that favorite relative valuation trade tends to go up quite consistently, and I've got a strong conviction that it will continue to do so. And because of that, if you enter that particular trade and you do not make money after 1 month of holding this trade, I will refund you 100%, no questions asked. I'll refund you for the premium membership. The monthly rate is currently $125. You can either pay via credit card, or if you want to pay in crypto, you can do that as well. For crypto payment though, the minimum duration is 3 months. But again, after 1 month, if you don't make money with that trade, I will just refund you. You can watch all the videos basically for free. And it's not just about the videos, it's also about the trades that I share in real time, where you can basically manually copy trade what's currently being done with the capital pool. Yes, the capital pool is currently closed, but if you join the annual membership, you will get the chance for early access to the next pool that will start at the beginning of next year. So if you don't want to invest the time, you instead just want to invest the capital, let this run for you. Then with the annual membership, you will get that offer first to join before the deposit limit is hit. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.